because I trade macro really, then the news is very helpful actually. So the fact that some prop firms kind of take that ability away from you, it could hinder your trading.
Oh, I'm covered up. Hey, Alan, how you doing?
Hey, how you doing, James?
I'm good. I'm good. Thanks for coming on today. We're about to transition on over to Chris. And one more time, guys, I'm going to drop this in the chat so that you can sign up if you want to come hang out with myself, come hang out with Alan on Saturday, March 8th. Let me get this link right here. Fill out this link if you're in the Atlanta area or if you can be in Atlanta by 6 p.m. on March 8th. If you want to come to the free event that I was talking about earlier, if you don't know what I'm talking about, scroll back like 30 minutes in the stream. You'll see me talking about it. We have a free event with Oanda coming up in Atlanta on March 8th. Please only fill out this link if you can actually be there, because I am confirming with everybody who can be there. I'm going to be there. Alan's going to be there. It's going to be a fun time. And Alan, thank you again for coming on. We're going to take a really quick break, and then we're going to transition over to Chris Pulver right after this. Alan, we'll see you later.
See you, man. Excited to see you guys. Have a good one.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Market smells blood. It's fine. We've got some 200 moving average on the daily time frame that's getting approached here on the SPX. SPY is also very close to it. The Qs have officially hit it. This might be breaking the streak that has been going since, I think, 2000. I don't know. It's like almost 500 days old. This is a pretty wild streak from the QQQ. Last time we had a close below would have been way back here in 2023. So we've had a 493 bar streak of closing above the 200 moving average. We've had an overbought, I've talked about it for 2-3 months now, which is, I think we've got a pretty high bar count. I expect this market to find the 200 moving average, and it probably will. So I've got a couple of hedges I want to start taking down. I closed out for a little bonus profit this morning on ES for $450. Everyone got a piece of that one. And then I've got another $400 here that's out to March 21st. This one price would have to drop all the way to 5,200. I also got a nice little bonus trap of around $50. That would be a bonus trap of 50 points. That'd be a $2,500 bonus trap if I get it. I'm already seeing some excess on that right now. So I pulled it in for 975 credit, and it's showing a debit. So I'm going to try to let this get into a bonus credit. And then on my MES side, I've got a couple of trades here. 6,200 by 57.25. Right now, that's up around $800, and then a 61.75 by 5,700. Again, that's up around. Let's see here. What is this one? So 62 by 57.25, and then a. What is this one? That's a call. Here's my other. Okay, there we go. So that one, and then 1274 by. Okay, that's up about $800. All right, so I'm going to look to close these down. We're getting close to my profit target. I had this all the way out to April 30th, but there's only about another 100 points lower to go. We're at 5807. I don't necessarily want to have to hang on to this. I've got a nice little hedge going, and I think I'm just going to continue to let this is like a way out of the money play that's at the end of May. If we have more pain to the downside, this will probably turn into like another $500 hedge. So I'm going to take the profit off of this 6,200 by 57.25. So I got into that trade for it's a debit spread. So 137.25 minus 39.50. So I paid $97.75 for the trade. And right now it's trading for like 270. That's pretty good. So in for 97, out at 270. That's almost a 300% gain. See if I can close out here at 270. 270 says no. How about 269? 269 says no. How about a 265? Feels like an auction house. $264. I'm just going to work this down $1 at a time. Come on. $263 just got filled. All right, very nice. So that one for $263. It's the 6,200 by 57.25. Okay. So 62 by 52.75. Close for 263. It's going to close out some of these hedges. Come on. $260 got closed out. 62, 57.25. Closed out. 62, 57.25. Okay, and this trade was a cost of $97.75. All right, I'll do the math on this in just a second. Just getting this one closed out for Pulver alerts. 62, 57.25. Closing out. 62, 52.75. See if I can sneak another dollar in here. Fine, I won't be greedy. All right, grabbed an extra 50 cents there. 62, 57.25. Closed. 62, 57.25. Good. Okay, that one's up a little bit. That's a cash account. $62, 57.25. Fill the 261. Okay, good. All right, I'm gonna go back through. I've got another hedge running, so let me get those closed out as well. The 61.75 by 5,700. So this one is around $100 debit. So 143 minus 40.75. So 102.25 debit. And we'll see what this one's trading for right now. 61.75, 5,700 should be up about $800. 250. $250 not filling. Let's try 249. Come on. Let's Got to find the sweet spot that I can get it closed out, and then I'll get everyone's positions closed out. All right, so let's try 248. Crikey. Let's go. I'm $3 below the mid, man. $247. I could probably just accept 245. 246.50. Okay, that seems okay. 246.50. See if I can get that closed out unanimously. So this 50, 61, 57. Okay. Come on. What in the heck? Let's go 265. All right, I'm just going to sit here and there we go, 265 for crying out loud. Okay, I'll watch this hedge. That's a bull call that can just run. That can expire worthless. That's fine. All right, let's get the whole thing closed out. So I've got that trade combined with this trade. Close this thing out for 265. 270. We'll try that. If not, I'll try to make this a little bit faster. 265. There we go. All right, 265 seems to be doing the trick. So 61.75, 63.75, 61.75, 5,700, 270. If it's not getting filled, we'll try the 265. Okay, taking the profit there. Good. All right, let me crunch some quick numbers here. Call, put. Let's do the quick math on this. So 40 plus 50.25 minus 135 minus 143. All right. Take the 61 there. Okay, just got to do some management. That's all. So that's maybe boring, but I'll get to the top down in just a second. I've got some trades running on SPX. Let's go here for 175. There we go. So close this down for about 265. Filled. Okay. This will be in the Pulver alerts under my futures trades for MES. Here we go. Almost there. One, there. Close 266 is doing the trick. Let that still work. Cash account. This one, I'm going to take just a quick couple $1,000 on that one. I'll come back to that account in just a moment. I'm going to buy some more SPY and QQQ. That one's got some condors. Okay. All right. I think we're good. So MES hedges are closed out. ES hedges have closed out. That's good. Now I want to buy. This is a cash account that I have. I think we're at a spot right now. I'm just going to buy a little bit more SPY. It's not quite there, but I'm just going to throw another couple $1,000 at it. And I'm going to buy DIA and SPY. So take another SPY. Go along the stock. And let's do the dollar amount. We're trading around 575. So I can buy about 3 to 4 shares. So I'll buy another 3 shares and then another 3 to 4 shares. So let's buy 3 shares. What's it going to set me back? $1,700. I'll go. What's our discount from the top? We're close to that 200 moving average. Got about a 6 point. That's not. I'm just going to buy. I'm buying 3. 3 shares is fine. So a whopping 3 shares for $1,700, but it's a little dollar cost averaging. Filled. Okay, I'll put this in as well. Just taking a little chunk, a couple $1,000 at SPY and Qs right now. $907.2. Just going to work through these accounts really quickly. Okay, I think I just got up to that account. Yep. Filled in that one. Okay. There we go. Okay, almost there. Come on. Let's go 20. Filled. All right, good. And a little bit here. Filled. All right, so a little dollar cost averaging in. Get that updated. Let me take a look and see if I want to buy the Dow. I think I'm going to opt for DIA over the Qs. Dow is a little bit further to go. I'm going to see if this will tap this 200 moving average. Probably doing a little dollar cost averaging there, but SPY is pretty close to the daily right now. All right, so that was a $575 cost average. At 575. Okay, just tossing it in there. I've got a little SPX action this morning. Right here. Got a butterfly for 50 cents. Have a daily profit play. Let me add this in for a butterfly. This is a BWB for Broken Wing. That one's all the way down to 56.50 for a potential trap. 50 cents credit. I'm going to try to keep that to the end of the day. And right now, I have pending 1, 2, 3, 4. Trading around $1.85, $1.75. Come on, $1.75. This is what I wanted. Bah, taking the winner. All right, that was originally what I wanted this morning. Good. So 10:44 a.m. Eastern Time. Taking that winner. And now Broken Wing, which allows me to see if price will hold. Here's a little intraday stuff. I've got a chart alarm down here. 56.50 is my Broken Wing level. So I'm going to see if I can put a label on this. Edit. There's a trap. It's a trap. Horizontal line at 56.50. And I'll label that if I can. So this is a BWB 3-4 expiration pin price. All right, so the way that trade's going to work is this. We had a close yesterday. Which was a ridiculous day, by the way. For a Monday, I did not expect that to happen. We had that huge move on Friday, and then Monday started out like slightly higher. I wasn't really expecting like crazy bull market, but I was expecting a little bit of this, which is just like a little bit of chop for a typical Monday. What happened in the afternoon was a little nuts, and it is what it is. But it's still, I mean, point wise, from the high of the day to the low of the day was about 177 point move, and then we closed around 138. We started today from the close yesterday, gapped lower. We've pushed down. We're hanging out about 80 points lower. Ended up flushing about 117 points lower from the close yesterday. So anyway, what I looked at is, okay, I've got a Broken Wing butterfly that would have to be 198 point push. So improbable. Not saying it can't happen, but 200 points on the day is pretty extreme. And that'd be a 3.3% sell-off from the close yesterday. Obviously, it can still happen. We might have more pain ahead. The nice thing is on the daily time frame here, this 570, or if you look at your SPX, we're getting very close to that 5,700 handle. So if we hit 5,700, I at least think in the short term, we at least have a bounce coming off of that 200 moving average. I don't know if this is the bottom. I really don't. I think if we have a bounce right here, we could still have support. This could become resistance again for another flush lower. This might be the better timed buy zone. If anybody is looking for support, right? And I talked a lot about this last week. Connect your April low from 2024 to your August low of 2024. And between this 200 moving average and that same area here, just this would be support. This would be support. I'm looking for that support as well. So on the SPX between 5,700, 5,500 zone, I'm looking at taking some nibbles and trying to time this for like a 30, 60, 90-day rally. I think that's a nice little flush out if the market gives it to us, which seemingly the pain is still upon us. But if it flushes out there, I do think the market can find a reasonable bounce. Okay. Same thing on XSP. We're getting close to that bounce level. I've got all sorts of trades running between like the 560 and 550 zone. I think this is enough wiggle room to have, this area bounce and offer up some profit. And if it comes down to, 560, 550, I still have these trades holding out to April. So I think I've got enough time in the trades for these to be fine. I have allocated a pretty good like weekly position to XSP. It's basically like the mini version of SPX, so it's a little bit cheaper to trade. It's still cash settled European options, no assignment risk. So I do like this instrument quite a bit. Futures wise, close out those hedges. You can see here that what do we find in the futures market? We actually found the 200 moving average. On the SPY, we're not quite there yet, right? That's one thing that's interesting about like the price action is like a little bit more pure in futures because technically we found the 200 moving average. I'd still look at the same thing. If there's more pain ahead, April, August, you got the 200 moving average down to this potential structural support. If you're looking at the futures market, we're hitting the 200 moving average right now. If that has anything to do with this market, bouncing in any way, shape, or form, or going back to this is actually a pretty easy chart to read. So let's go to this guy. Okay. I would say if you're looking to be long index futures, probably waiting for price to break that trend line. Now, if price gets a little bit more aggressive, so basically it's a bear flag here, another push lower, if it's another bear flag, then I can get a more aggressive trend line waiting. Maybe it's around that 57 to 5,500 zone. But I just think picking the bottom could be extremely difficult. I've got an area. I think trading options on futures, options on indexes, ETFs is probably what I'm going to do. All right. So here's top down. So S&P getting closer to the 200 moving average. Okay. We've got this 5,700 to 5,500 zone that I'm looking to take some bites on. SPY, I just bought a few more shares. I'm going to wait for a little bit deeper. So I bought a little chunk right here. Okay. If we pull back into like 555 or 550, probably taking another nibble. I'll probably look at a $2,000 to $3,000 allocation. So that's a, $2K chunk right here, kind of double down on that for a little dollar cost averaging. And if that gets back to the highs, I could take, maybe a $5,000 position and turn that into $500, $600 of profit. Okay. And on the option side, I'll be a little bit more aggressive, probably taking like 0.25% to 0.5% risks and try to, get that to be 1-to-1 or better. So if I can, have another 1 or 2%, that'd be great. But I am looking to see in this area, if this market is resilient enough to get back to the highs again for the year, I want to see where my P&L is. I mean, if you've been watching these sessions for the last 60 plus days, I mean, I was up 195K, which has been pulled back to about 32 grand. That doesn't feel very good. So am I taking losses? Am I realizing losses? No, I'm still positive on the year. But that is a big chunk of red. And a lot of that is just based on options prices. Some of it is the floating P&L. It's not realized, but not what I want to see as far as the bigger swing. I have braced for this. I just closed out about, trying to think, maybe 20 grand in hedges. So it's better. I'm offsetting that drawdown a little bit, but not exactly the swing that I wanted to see for 2025. But having said that, I do have enough positions running where if this is around the area and bounce that I'm looking at, I probably have somewhere between 5 and 6% gains sitting right here. If we bounce up to there, there's about a 5 to 6% gain across the portfolio that will help. Even if we get back to all-time highs, that's a boost of 5 or 6% on top of getting back to that high watermark. So potentially, I'm just doing some rough math here, but I'll take the conservative side of 5%. So that's 150 on top of the 195. Like, I could see my watermark being up to around 345. If we hit all-time highs, I should be up to around $340,000 in profit. That is enough of a chunk for me to say I might be getting a little bit more protective. I might be starting to thin out some of my positions, reduce a lot of the unnecessary exposure, and kind of look to play dividends, play cash, play more conservative for 2025, just in case. But we'll see. We'll see. But I will be grinding through it per usual. All right, let's go top down again. Nasdaq. I'm going to stay out of the Nasdaq for right now, unless we come down to this area. So I think I could see Nasdaq dropping a little bit lower. So coming down into 470 or so, 450 area. I'll be watching that. I've got some pretty good trades running on Nasdaq right now, or QQQ. So I am in QQQ. 455 by 435. That's the only time my position is going to be threatened. This is a 450 level. So we'd have to break this January low and April low and August low. We have to break that structure. We'd have about a 15% correction from these highs. Yeah, I mean, I'm giving myself plenty of margin for error. The nice part is I'm in a profit scenario right now where this 519 by 520 is going to be it's into April, but this is a $100 profit trap per contract. I also put in another trade here on the QQQ. This one, the 535 by 530 by 490 by 430. That was out 73 days. 490, huh? We're trading right at 490. Well, I might be taking some shares of the Qs then. But I do have a $500 profit trap on that, which is nice. And we'll see how this one plays out. But this is going out to May. I think I got to give myself plenty of time. The other one is, let me just group this one together. That's going to be a shoot. There we go. Okay, so that's a 111 trade. This one, the 520, 519, 455, 435. Same thing here. And interesting. I have this little low long. Oh, it's a sell put. Never mind. I thought that was a hedge. But this trade is up $310. All right, I might just close that out. That's essentially a leap. It's up $300. Max profit's 563. That's over 50%. Might just close that one out. This is a 111 right there. Okay, and this little tiny leap for max profit 563 up $300. Let me see if I can just close this one down. So it's up about 50% right now. Pulled in 563 and trading for 258. So 563 minus 256 or so. I'm up $300. That's not bad. Oops. Okay, I'm just going to take that trade off. That was just selling pretty much at the high. I mean, honestly, I guess if I just leave it alone, it's just taking up some buying power. If I take this one off, I'm getting back. I mean, it's a portfolio margin account. It's not going to be getting a ton of buying power back, but it is a little winner. Otherwise, would I be happy owning the QQQ at 364? I think the answer to that would be absolutely. From these all-time highs, if I own the Qs at 364, we'd be down. I mean, the scary part is like, oh my God, the Qs are down blank percent. I don't know if they're going to be, but 364, we'd have about a 33% discount on the Qs. That's 2022 bear market territory, if that is the case. So I suppose I'll just let that one ride a little bit. If I get closer to, it's only 55% of profit. I get closer to like 75, 80%, then I'll probably just take the profit, be more capital efficient. So, all right, talk myself out of that one. Anywho, what else is going on? Let's go. Dow. I still like the Dow. I think this is worthy of dollar cost averaging around this 415 to 400 zone. Probably just taking a little $2,000 chunk and throwing it in there. Upside wise, if we get to, let's say, 415, get back to the highs, it's about an 8% move. If we get into like the low 400s, I like kind of the 405 zone. 405, that's up 11 plus percent. If I can turn, and this is going to be like options based, but if I can get the S&P, the Dow, the Qs to give us like a 10 plus percent move, I mean, you can turn 10% of a directional move on the underlying into a lot of profit thanks to options. So not taking crazy amounts of risks, but taking some nibbles, staggering out maybe 30, 60, 90 days, maybe even out to the rest of the year and just giving the trades time. But something like a bull call spread, if anybody is familiar with that, if you're trading options, that should be pretty straightforward. But let's say that price is right here. Okay. If I buy a call around, let's say 415, okay, I buy a call for 415 and I would sell this around let's say 450. So the most I can make on this trade would be $35. Okay. But what would be nice is if I buy this call, what would usually probably cost me, $10, $15, $20 to trade it. If I sell some premium against that, I can reduce the cost of this trade. I'll look at a trade right now. We're trading at 424. Let's just say I like this trade right now. I'm not going to take it because I'm not at the price that I want, but I'm just going to look at it. So let's go to, if I went out, let's say 73 days. So I like 45, but I'll probably get a little bit further. Okay, so if I bought a call at 424, 425, it's going to cost me about $1,400. If I sell that all-time high around 450, once my option chain updates here. So instead of paying just straight up $14, what I can do instead is pay a little bit less. I pay $11 for that trade. And if price goes up, okay, let's say price does in fact go to 425 to 450, gives me a $25 max profit, right? So $25 max profit, and I'm only paying $11 for it. I mean, that's a pretty good return on capital, right? So I pay 11, I close out for 25, that gives me a net $14. That's more than 100% of my position. Everybody following that math? So if I close out for $14 out of $11 debit, I make 127% return on risk. I'm okay with that. So if I did that for, 2 to 3 contracts, let's say this is a $2,000 to $3,000 debit and I make, let's say I do $2,000. Okay. So I put $2,000 on the position. I make $2,540 in profit. That's a pretty good trade to me. So it's that type of like asymmetry. It's that type of reward to risk that I'm looking for when it comes to positioning for SPY, QQQ, DIA in the next, 70, 80, 90 days. I'm curious if I went out even further, what that would look like. But the only problem going out farther is I can make this debit, comparable. It might be a little bit more expensive, but the sell side of my trade wouldn't be as good. So it would be harder for me to reach the full profit potential at $25 if I'm out farther in time. So anyway, but that's a pretty easy trade. That's a pretty easy trade for the next, I'd say 60 to 90 days. I'm fairly bullish on this like market resiliency by July, August, September of this year. All right. I think the big question I have is by September 2025, where are the markets? Right? Because if Q4 is bullish, we should celebrate. But if Q4 limps in and slides lower, I would say look out for a rough 2026. Okay. I'm not bearish on the markets right now. I've been looking at this, planning this corrections. We have like these big sentiment swings that have been happening since last week. But Q4 is going to be in a really, really important quarter. Usually seasonally from October to December, October to January Typically, you see some really good flows in the market. Optimism carries on. And when just the markets typically drift, like lower volume, there's less selling in the market. But Q4, if it's not bullish this year and to finish out the year on a high note, then I would be really cautious going into 2026. Okay. So I think that this is a healthier market to come back and find a pullback first. And I look, I know there's still all sorts of worry of like, oh my gosh, it's going to get worse. And this, maybe it does, right? There's still a lot of resiliency. Why could the market still go up? So we have market is pricing in the bad. But right now we have the Fed looking at 3 cuts in 2025, and it was 0, it was 1, right? So now they're looking at the CME watch tool for the Fed is looking at 3 cuts this year. We also have $1 to $1.5 trillion in potential buybacks. Okay, we also have the US 10-year dropping. So rates lower. This could be a little boon for the housing market. This could be at least getting the market out of this frozen like supply side where supply is catching up. Nobody's moving because they're all locked into low interest rates and nobody wants to move at 6-7%. House prices obviously have appreciated like crazy where everyone's house is up like 50% or 100%, if not more, depends on where you're at, these stupid, ridiculous housing markets. But anyway, where's the resiliency? On top of that, you put in what the market was anticipated in that big Trump bump last fall in November would be tax cuts, deregulation. That's all pro corporate growth, right? That's all pro profits. But on top of that, the scary part is, how can we afford to cut taxes? I don't know. How can we afford to start a crypto wealth fund? With what money? We're $36 trillion in debt. The government takes in 60+% more tax revenue, but still spends 90+% more. You're not going to make any money when you operate at a massive deficit. Again, I'm not the doomsday, like, oh, the bubble burst and the spiral. I don't know what it's going to take to dethrone the US. I do think there's going to have to be some type of reckoning / the market at some point is going to realize, like, is this debt problem? Is this a debt problem? But if you look at Japan, debt to GDP is over 200% in Japan. Okay. And are they still a country? Are they still considered a safe haven currency? Maybe. But what a wild story for the last 30+ years in Japan, right? I don't know. Nobody knows what this is going to be. But I will say that right now, with this market correcting, this is what we needed. Okay. This to me makes a healthier bull market and a healthier market in general. And there are buying opportunities, in my opinion. Okay. If it gets really, really, really rough out there, then we are just totally breaking all the structure and this market is going to implode. My biggest concern over the next probably 1 to 2 years would be finding this 5-period yearly average. So that's a 5-period yearly average. And it's all the way down here to 360 on the Dow. It's down to like 4. Where's it at on the Qs? We're down here at 382 on the Qs, and on the SPY we are down to 464. So this obviously isn't going to move very quickly. This is going to settle in at the end of the year when we have a closed year to give us what that new price average will be. But that would be where I'd say, okay, if you want to talk about doom and gloom, you want to talk like really bearish crap, then look at your previous high from 2021, 2022, and look at your 5-period moving average on the yearly. That is a very healthy flush. That would be anywhere between 20 and 30% corrections on the indexes. I'd still be a buyer because you can set yourself up for, if you've got the cash to do it, you've got the time horizon over a 3 to 5 to 10-year window, you could probably double, if not triple, your investments. But it's going to take some pain in order to get that bargain, and that's the scary part, is nobody likes dealing with pain. Heck, we've dealt with a 5 or 6% correction. It feels like the market is going into a full-on recession. Just the sentiment is so ridiculous. The media is so loud, and it's just a bunch of noise. All right, let's move on here for a few more minutes. We have volatility index again up to 25 and change. Are we going to operate in a VIX that's going to spike up and cause more pain and more harm? Or is this a VIX that's going to be relatively volatile but not necessarily too much of like an outlier event. I don't know. Time will tell. I don't think we have any reason to spike up like we did in December 18th when there's holiday trading in the Fed. I don't think we have a reason to spike up like we did August 5th when the market was breaking down over a weekend with Japanese yen and the SOM rule activated. I don't think tariffs are really that dramatic. I mean, we shrugged them off after DeepSeek twice, and somehow yesterday it's like tariffs and the market's imploding by 200 points. But I could see us just having elevated volatility. The market's still kind of working through this uncertainty. SVXY actually had a pretty nice dip. This is somewhat attractive. This was the drop from July to August. I'll hold off a little bit because I think if there's some more pain ahead, this could be an easy trade to get back. I could go long SVXY and try to turn this into, I don't know, I might take maybe a 500 share position and 500 shares, try to get, I don't know, $3, $4, $5 a share, make a couple bucks on that. I will keep a close eye on this one to maybe buy a dip. And that's ultimately, it's a way to kind of fade volatility, but I don't think volatility is done yet. Dollar index, that's a big 2-day reversal right there. We came all the way down to that 106 handle, lows in the 105.90 zone. I think this is still a pretty strong support level. I'm not necessarily buying the dollar. I'd like to see the dollar try to bottom out here if it's going to, and maybe look long. I don't think anyone should complain if the dollar does this. If the dollar just drops and keeps dropping, that keeps the 10-year dropping lower. That's probably the necessary correction that needs to happen. I'd love to see the 10-year drop as much as possible. But dollar index, I would say if you're looking to base this thing, I'm going to ignore that little gap weekend and just connect the dots right here. I think that's more of a steady, there's resistance, that's an outlier, resistance there, resistance there. So if you're looking to get long the dollar or respective currency pairs that are favoring dollar longs, looking to see how it plays out, I think we could have a range on the dollar. So, but I'm hoping if there's more sliding to the dollar side, then I'd like to see the US 10-year drop lower too. Okay, oil, oh baby, we are down into some lows here. That's interesting. I don't think I'm going to, I don't know. I want to take a little stab at oil here, but I could also be playing with fire. I think I'm just going to stay out of it. Just going to stay out of it. Let me check one thing really quickly. This trade for SPX is right now trading for, oh, nice. I got a good fill here for 50 cents. It's trading for 35 cents. All right, I'm going to keep an eye on this one. This is that 56.50 broke wing butterfly. I'd love a little profit trap at the end of the day just to give me a bonus, but not there yet. All right, let's go up here. We're at 57. Okay, and that was a 56.55 put. All right. I talked about this for the last month or so. I was looking for maybe a bull call spread and trying to get some lows in on oil. But I don't really feel like calling this bottom. If we have, I don't know, if we have struggles ahead, I don't know. I think oil is just crazy amounts of trading. I think oil could break this floor. If it breaks the floor, who knows where it stops. We stop at $60. It's arbitrary. We've got some support and resistance in here around the 50 handle. I mean, it's just been leaning lower, pushing lower, testing lower. If it breaks below $62, I think there's room to drop down to the low 50s. So I'm just going to stay the heck out of oil for right now. Gold, 29.06. Gold caught a pretty nice bid here the last couple of days. I still don't think it's pulled back enough. I'm waiting to see if we can pull back to at least a 21 moving average or this previous all-time high. This obviously has a pretty nice bar count as well. I'd love to see gold pulling back into the 100 to 200 moving average window before I start to establish more longs. Silver's hanging in there. Got some 1-1-1 trades and some credit spreads. Bitcoin, pretty volatile. We had the crypto summit over the weekend. Everyone got all amped up and excited. It's faded hard. Look, this is a pretty simple trend line. If Bitcoin can base, okay, I'd say a really key level in Bitcoin is that we don't do too much damage below 74K. If we look left, 60 grand is really strong support. If you look at all this election chop, this pre-election chop in here, but between 75,000 and let's say 60,000, if this level at 91 broke, which it did, and we're obviously spending some time below that, but between 75 and 60K, we want to see some pretty strong interest coming back into the markets. Again, good upside potential, but you're going to have to see the stock market rip higher in order for Bitcoin to go with it. I don't think there's any way possible that Bitcoin just operates with bullishness without having everything else go bullish as well. And the same thing is true if the market is down, Bitcoin's not going to be doing well either. It's a lot of liquidity and flows and risk appetite priced in Bitcoin. Okay, MicroStrategy at 244. I'm just hanging in there right now. I could probably close out some of my call side. I've got a sell call at 310 out to May, I believe. Right now, my call side is it's up. So it's maxed out around $6,100. It's up about 64%. I'm just going to let it run a little bit longer. When this gets up into maybe 85, 90%, it's more cost effective for me just to close it and reposition for it. My $200 put out to May is also protecting me for right now. So I just have a pretty wide collar trade on MicroStrategy. And this is another one that I think is going to be a critical spot. We shouldn't really do too much damage below $200. I think the biggest concern on MicroStrategy is that, and Michael Saylor, for as much as he's been praised, is going to be like the scapegoat for like how he ruined crypto. I don't know if that's the case. I don't know. That could be the scary thing. Is all this is doing is forcing people to buy MicroStrategy to have some type of extension, in crypto. I mean, if you own the QQQ, you have crypto exposure because MicroStrategy is now in the Nasdaq. So it's just made it really odd where like everyone that is in the markets now has exposure to crypto because you got a company like this that is basically like a struggling tech company that is just all in maximalistic on Bitcoin. So I'm not looking to hang on to this any longer than I have to. If I can flip it into income, fantastic. I probably will not really want to touch MicroStrategy too much ever again. I'll keep my Bitcoin exposure, keep it down. We're trading at $200 here on Coinbase. Watching some levels here very closely. We'll see. Ethereum, no signs of anything positive yet. Japanese yen, fresh high. I closed out that Japanese yen futures position. There's my FXY making some fresh highs as well. Long shares are looking okay. The DAX, big high and then a big flop. So I still think this one has to pull back towards some type of dynamic moving averages. FTSE, same thing. Nice little evening star at the top. Argentina starting to flush down a little bit lower. I wouldn't mind scooping up some Argentina here around $75 or less. China fading a little bit off the highs, but still, anything goes. Brazil, oil prices are dropping. Brazil's going to drop with it. MAG's down to the 200 moving average. Potentially a good looking trade. I'm not going to call the bottom here on MAG 7. I think this is still a hard rotation out of MAG 7. Get that concentration down and rotate elsewhere. So yeah, I'm just going to stay out of MAGs for right now. Apple still showing resiliency. Amazon, gaps lower, but let's see what it does. Watching this level closely. I got to put ratio spread on Amazon. Let me take a look at this one. Amazon, 200 by 195. This is out to March. Right now it's showing about break even on the trade. And then I've got some other ratio spreads that are lower prices. This one actually might be, I don't know. I'm not going to say it's going to be perfect, but it could be pretty good. So I collected about $1 on this trade. So 440. So I collected 98 cents on that trade. Plus I've got a $5 trap. If we do come down into 195, 196, I wouldn't really want to see it necessarily close below. I mean, I could take the shares and try to repair it and flip it. I'd own the shares down around 190 anyway, if that was the case. So I think it's okay to repair it. But, anything above 200 is fine. Anything down into like the 199, 198, 197 is a bit of a profit trap where I take $1 credit, turn it into $2-3 bonus credit. But that $200 level might be pretty strong on Amazon. We've had a decent like double-digit correction. Nothing crazy. It's not down like 20-30%, but it's down about 17%. 17-18%. It's a pretty healthy correction for one of the world's largest retailers. So I'll keep an eye on that one. Google sliding below the 200 moving average. I think the best time to look to get long on Google would be this. Get back above the 200 moving average and then see if we can come back from another charge to the highs. Until then, though, it's like be careful just in case it's going to keep sliding. There's some strong support back here on the 150 handle. Got a lot of income trades running on Google. Okay. 10-year yield is down. Keep going down, baby. I don't know if it's going to go too much lower, but we'll find out. Okay, let's get to some currencies really quickly. Dollar index, again, to revisit this. Here's currency strength for the day. Let's look at yesterday versus today. So yesterday, interesting breakouts. We had Japanese yen weak to then strong, like crazy amounts of risk off trading in the afternoon. So the Japanese yen ripped up higher. The Swiss franc stopped up there. We got euro and pound up yesterday. This is yesterday's price action. Okay. CAD took a big drop lower. Today, we're getting a little bit more volatility. I mean, we've got a big swing here on the Japanese yen and the CAD yesterday. And then today, I'd say steadier. We're probably getting some higher daily trading ranges on currencies. If anybody's in the Forex market day in, day out, you're probably noticing that intraday volatility might be increasing with some of these like risk-off flows. Japanese yen and Swiss on top today. So again, showing a bit of a safe haven risk-off flow and tone to the market. So just a quick spot check. Aussie CAD, I'm still holding long. Aussie Swiss, son of a biscuit. Looks like my Aussie Swiss might be time to buy. I could just basically level myself into here to pair some of the core positions I already have, but not a bad spot. Starting here, revisiting flash crash lows, build a position, take it back to a center high. I might take some losses here. I did start buying a lot of this Aussie Swiss in this area, so I might end up taking some small losses, but if it gets back to this high as far as the net position goes, I'd love for this thing to be all the way back up to 6,000. A double bottom measure move. This would be the center high. If we go low high and we break that higher, I'd measure that move up towards 6,000. Okay, it's not that the Aussie's so weak. It's mostly that the Swiss is strong because we're getting some safe haven flows. Aussie New Zealand's. Okay, I'm going to hang in there for this one. Aussie dollar. I closed out of Aussie dollar when we hit the pocket level. I closed out here right around this previous support. So I grabbed 2 winners out of the Aussie dollar right there. CAD Swiss looking like a trade that if you want to get and again, this isn't necessarily calling the bottom here, but if I could dollar cost average into, I probably just need to start adding more. So one position here, another position right at the low, and then wait for a price pattern to emerge, and then look at stacking up some buy stop levels and get this back to the center high. So it's going to take some time, but I do like this opportunity on CAD Swiss. Just keep adding to my overall position, which is like really small. I've been trading this thing since 2022 and still building. So hopefully this flash crash low from August is going to hold. And if it does, that's a great spot to just run the sellers out. There's no more selling pressure. And all of a sudden we go up, 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 back to center highs. So CAD Swiss, I'm going to start adding a little bit more to it. Let's see here. Swiss yen, I closed out for profit on that one. CAD yen, back down to these August lows. I don't know if anybody's trading the yen crosses. It's my least favorite currency. That's why I decided to trade futures instead. Aussie yen. This is going to be a really interesting spot on the yen crosses, because if we go July to August and this market wants to bounce at those lows, don't be surprised if we have some risk appetite coming back to the market. It may not break those lows. Right? I mean, some traders might look at this and say, "Oh, this is a perfect little symmetry trade, and we're gonna flush lower." Maybe it does, right? But I wouldn't be surprised with the damage that this did from July to August if this market finds a way to fake out here and then get back into a range. So this could be a really low risk, high reward scenario as long as you're not getting beat up too badly around that support. Just be careful at that support level, but I think that could offer a really nice high reward, low risk scenario. But you gotta watch your price action. Okay, plan for gold. I'm just going to wait for pullbacks. I want to see bigger pullbacks on gold. Let's go CAD Swiss, CAD Yen. We did. Let's go Euro pairs, Euro Aussie. Aussie's weaker, Euro stronger. Again, kind of some safe haven flows. Dollar's been weaker as well, which makes the Euro stronger. I got no trade in this one. It's been ripping pretty inefficiently. We've got like six or seven candles in a row now. 1, 2, 3, 4, 5, 6, 7, 8 daily candles in a row. That's quite a stretch. I wouldn't be too surprised to see this resistance area or this resistance area hold in some capacity, at least in the interim. But I don't know. Don't call the top. Look for some price action to give you some evidence. Look for a bear candle to see if there's any follow through. But again, resistance area. Look for some price to support your confirmation that it might be fading. 8 candles in a row is pretty high. EuroCAD breaking higher. This is why I didn't force trades on EuroCAD, PoundCAD. I just didn't know what the CAD was really doing. I'm not trading it. Euro Swiss showing some resiliency, which is fine. I got some stacked up orders. I'm still got a big position running on this one. Euro Pound closed out for a break even trade on this one. It was like a small winner, like 50, 60 pips. That's it. I'm not in this trading any longer. I don't really care about this one. I let a robot trade a lot on Euro Pound. It's, only moves like 30 pips a day. Euro Yen back down to that August low. This is going to be an interesting spot. Same thing as Aussie. Are we using this level to bounce? Right? I mean, if you're looking at a smaller time frame, look to see if you got some price action to support the evidence that this is wanting to go up, stop loss below, and there is some really good potential. Just coming back into this cluster could probably be like 1,000 pips of upside, and you're trying to get as little risk as possible, but you might have to give yourself like 200-300 pips of wiggle room and also trade some confirmation. So I wouldn't call the bottom, okay? But I don't know, just be careful. Yen pairs are tricky. You're New Zealand also ripping higher, another like 7-8 candles in a row to probably similar to the Euro Aussie. I wouldn't call the top here. I would just let it do its thing. But if you're not long, don't get long now. If you're looking to get short, wait for better confirmation. Euro dollar in the 105.30 area. If we're going to have a nice turn on the euro dollar, I'd like that to be somewhere in here. I'd like resistance to hold around 106. If the dollar's going to turn, that's that 106 to 105.50 zone. And if the euro dollar turns, look for some resistance in here. If we break back down, we could see this revisiting lows again. This discussion of getting back to parity could be on the table, maybe. But trade your dollar index, watch your euro dollar. Don't do anything stupid. Pound dollar, pound Aussie. Pound Aussie, pound New Zealand, probably doing the exact same thing, just up 7-8 candles in a row. Don't get silly. That's a big move. I wouldn't call the top. I'd wait for smaller time frame confirmation. Right? I mean, I said here for the last couple of months, it's like you've got really good dynamic support. You've got a swing opportunity on pound Aussie, pound New Zealand. The hard part is that's a crazy move, man. I mean, this thing's up 700 pips and it's been up every single day for 7 straight days. That's not a usual Forex move, right? So there's clearly some crazy gains to be had, but that is a wild move. Pound CAD also heading to fresh highs. Okay, a lot of chopping here. Now that we've broken a lot of this resistance, like I don't really know what the pound CAD wants to do. We're in some open space. If we don't stall here at like 8,500, this pound CAD has plenty of room back to like 9,000. Who knows? I don't know, but be careful. Trade what you see. Follow what you see. Pound Swiss is still showing some resiliency. That's fine. Pound Yen, careful on that one. There might be some room back down to this highs and lows. So if we're going to continue to look lower towards that August 5th bottom, maybe a bouncing point and a stop loss with some good swing trade opportunities for higher reward than risk. Pound dollar, if it turns over, it's not there yet. I need to see the pound dollar break this trend line. So if we fake out here, roll over, possibly that trade with a revisit of the lows. But you got to get a good sense of what the dollar index is doing. If the dollar index looks like it's continuing to drop, then I wouldn't call shorts on euro dollar or pound dollar. New Zealand CAD, I'm still long in this one. This is just a big range trade that I'm dollar cost averaging into. New Zealand Swiss, probably going to get an opportunity just to keep buying into this flash crash low August 5th and just hang on to it for some positive swap and some good upside potential. New Zealand yen, I'm staying out of. It's back down to these lows. Watch and see if it behaves or bounces off that level. Okay, there's two levels I'd watch really closely. High, low, lower, high, equal low. Watch this for potential bounce. Okay, so we could have just a nice opportunity for a tighter risk and a good favorable reward to risk on these crosses if these August 5th lows on the yen pairs hold. Okay, if that is not the case and we have more risk off trading where everything is down, high, low, lower, low, hitting symmetry, then we have a likely bounce. So if this doesn't behave, don't force that trade. If it does behave, we could have a respectable bounce and we have, 700 pips here or so, almost 900 pips. You could have 1,000 plus pips on the euro pound or the pound yen, or the euro yen pound yen. So there is potential, but man, you got to just confirm it on the smaller time frames. New Zealand dollar. I'm still hanging in there with some longs, and I'm trying to get back to equal highs or even 50. I'd say 5,800 to 5,850. I'll close up my New Zealand longs. Dollar CAD. Interesting turn of events. I thought, and this is still a possibility. With that little like weekend fake out, I was just totally a liquidity hunt. If this is going to be a topping pattern, you want to look to see if this thing turns. If anybody's looking to short this on a swing trade, there's your opportunity, but don't force that sell trade. I think that stop loss could certainly be grabbed. I think with this tariff talk, the U.S. economy is probably in a better state than Canada. Be careful, because if we break these highs with some conviction, I'm telling you, this could still be going higher. Like, if we look left on this chart, look left on dollar CAD. I mean, what is stopping this thing above 146? Nothing, right? 146, we can go to 150. 150, we can go to 155 or 160. Why? Because it's been there before. There's your highs back in 02. So don't call the top. Now, it would make sense that if we hold resistance, that we have this intermediate level of support and all the way down here back to 125, 120. I just don't know how Canada or oil necessarily gets stronger. So I'm super happy and lucky that trade worked out. I mean, lucky, sure, but it was a long time coming, and that trade took forever to line up. So I'm just not forcing trades. That's really what it is. If we break this high, I think dollar CAD long still works out. And it might be like the most ridiculous trade, but guess what? If it hits 160, I'd love to short it and take it down for thousands of pips. But if it doesn't happen, then I would just be watching, but nothing crazy on it right now other than trade what you see. Dollar Swiss still offering a bit of a pullback. I may look at revisiting and reloading around the 50% zone. So if we pull back into here, 50 to 60 to 70% pullbacks, and even all the way to 100% pullbacks, just trade the range. So I can scale in here, stack up some orders, see if it comes back to range highs. Might turn out to be another opportunity. Okay, oil prices. Oil is testing the lows. I just don't think this is a spot to call the bottom. I think there's a reason, right? We could certainly hold that floor, but my biggest concern would be if we are going down, the last thing I want to do is be bullish on oil. Like, literally the last thing I want to do is trade this thing like, oh, it's got to go up. If I traded oil up, it'd be a bull call spread, it'd be futures options, and it'd be defined risk. But I don't like this trade. I think oil is, we have made lower highs for the last year and a half. We have had equal lows for the last year and a half. And if this floor breaks, then there is room to drop. $55, $50, there's room to get down to those levels. So we shall see. But I don't want to call that bottom. I thought it was good. I don't like it. I'm just going to stay out of the way. Okay, so that covers all the currencies. I'll wrap it up there. Am I still long New Zealand dollar? Yes. Still long New Zealand dollar? Yes. All right. On that, I'll let you go. Thanks for being with me for the segment, and we'll see you again tomorrow. All right, take care. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.